if Warren Buffett doesn't start selling Apple stock at these current highs or a little bit higher. Welcome to RJTICHARTS.com. But first, stock and options trading carries a high level of risk and can result in loss of all your investment. Futures and forex trading can result in the loss of all or more than your investment. As such, options trading may not be suitable for all investors. You should not invest money that you cannot afford to lose. Now, before I get started, I'm going to advise you to not act on your outlook within our portfolio or other investment decisions that would have an impact on your Apple stock holdings based on this message. Bottom line, this isn't an investment advice we're offering. Yet what we're projecting is our outlook for Apple company, and yes, many will think our outlook is preposterous, and that's fine too. But we're going to show you why our gumption, like we've done before, with projected warnings for Apple, shouldn't be brushed off. And yes, we are again striving to be the first to put out what we think that most can't see coming for Apple. Let's start out by acknowledging this from the Motley Fool, which writes, Apple is nearly 50% of Warren Buffett's portfolio, but he spent almost twice as much buying another stock by Sean Williams, June the 23rd, 2023 at 5:06 a.m. A beautiful picture of Mr. Warren Buffett. The Motley Fool describes by Sean Williams on June the 23rd, 2023 at 5:06 a.m. There look to be 4 factors that have endeared Buffett to Apple. The first is its customer base and brand. It's pretty consistently viewed as the world's most valuable brand in surveys, and its customers are exceptionally loyal. The second point, which builds on the first, is that Apple has a rock-solid management team led by CEO Tim Cook. Under Cook's leadership, Apple has maintained its dominance in the U.S. smartphone market share and continues to evolve into a services provider. Buffett rarely, if ever, invests in businesses with questionable management teams. Innovation is the third factor likely driving Buffett's interest in Apple. While the Oracle of Omaha probably couldn't tell you how an iPhone works, he can see via Apple's earnings reports how its evolution into services can lift its operating margin long term and lessen the revenue volatility that occasionally accompanies iPhone replacement cycles. Lastly, Apple has one of the best capital return programs. While its yield of 0.5% is nothing to write home about, its nominal dollar payout of better than $15 billion annually is one of the largest on the planet. Furthermore, the company has repurchased $586 billion worth of its common stock over the past 10 years. Let me say that again. The company has repurchased $586 billion worth of its common stock over the past 10 years. Warren Buffett absolutely loves when Berkshire's stake in a company grows via share buybacks without having to lift a finger. Now, RJTI charts. There you have it. The best fundamental analysis offered by one of the most profound investors of all times, the Oracle of investing, Warren Buffett. And many ride his coattail and slurp his ideas even when they don't have room in the stomach for more, like the Jim Cramers of the world. But there's one little catch, and you know what it is? RJTI Charts has picked the top turnaround levels for Apple over the last 8 years, while most were slurping for higher trade. Respectfully, our sell signals were the months and years 5, 2015, 10, 2018, 2, 2020, in January 2022. And Apple had great fundamentals working in the company's favor then too. After any one of our sell signals, Apple over those years experienced a drawdown as much as 12 to 38%. So, fundamentals are great, but what Warren Buffett is projecting as a reason why his stock isn't going to head south, we simply don't agree with him. And Apple isn't a straight climb up from here, but a healthy pullback is in store. $150 to $105 range, and time will take care of our projected outlook. Yet, a long-term view does offer a better outcome 5-10 years down the road for Apple. We are warning Warren Buffett and those lookalikes that if they don't start selling at these levels or higher, the risk of experiencing a 30 to 50% decline is beginning to knock at Apple's stock value door. And I don't think Apple trading in the range of $105 to $150 a share would be greeted with joy in one's portfolio from falling from the current level, $194.48 as of June 30th, 2023. But this is how we see it. And the risk is very high that our outlook is going to mature against the oracle of investing in those who took a bite out of Apple at the $150 a share or higher levels. But again, we could be totally wrong in our assessment, but we don't think so based on our algorithms. Why are we so not into Apple? This isn't true, for we recognize the value of this company plays in the world. And it's not like we didn't see this Apple rally coming. And our algorithms identified the rally to commence without being in Berkshire's circle. Here's a chart showing we got our buy signal for the year 2023. As you can see, the buy signals came somewhere near 125 to the 134 range. And currently, it's still on that buy signal. But just because something is a gem doesn't mean it can't become devalued. And this is a mistake that most are making when it comes to Apple, as they continue to move away from the idea that Apple is not a company and isn't subjective to the same risk factors that any other stock company is subjective to. And if you think our lot of comments is out of sync, then go back and revisit the years 2022, 2020, 2018, 2008, and 2000. So although Apple has it together, this company isn't immune from the risk that lies at its doorsteps every day. Therefore, it doesn't matter what Warren Buffett says unless he is guaranteeing that Apple, because of his $366 billion investment, Apple will keep him from such risk forever. We say hogwash. What do we rely on? Our algorithms. The same methodology that projected bottoms and tops for Apple. Stock market. And a lot of these tops projected were, wow, 97% of fund money managers were giddy and buying without a clue as to what was coming around the corner. Like when we warned in the year 2019 that a black swan was to appear, and a surprise came in year 2020 that sent fund money managers into a panic. Or when we forewarned throughout the whole year of 2021 that the rally would dissipate. And afterward, the year 2022 socked fund money managers again, including Warren Buffett. So, it's obvious we aren't afraid of fundamental analysis projected by the oracle of investing or any other guru, firm, or TV personality. Our algorithms are again blinking like they did in the years 2007, third quarter of 2018, fourth quarter of 2019, all of the year 2021, that pain was just around the corner. That the fundamentals meant absolutely nothing. And a physics and structural violation had to be corrected, as is the case now. Therefore, at some point, a repeat of the year 2020 or 2022 lies at the door. And this coming decline includes Apple. So Warren Buffett is risking 30 to 50% of his Apple holdings based on fundamental analysis, and that's fine. But our algorithms are warning him and others that this is a great selling level, if not a little bit higher, to either hedge or take some profits off the table or suffer through a 30 to 50% decline in Apple stock. What a preposterous outlook from RJTICHARTS. Yet, it is easy to see the trees that make up the forest. And it's even easier to see the forest that's made up of trees. But it's not so easy to see behind the forest. This is a chart of Apple quarterly. You can see the range that we're looking for it to return to at some point, 150 on the top end, $105 on the low end. Things don't have to happen overnight, but our algorithm is saying, be aware. Get your ammo today. Get your equity subscription today. To contact us, info@rjticharts.com, 888-521-3555. rjticharts.com, driven by infinite wisdom and its proprietary trading systems.